And we're back. This is This Week in Coverager. This is the podcast where we talk about news events for the week that have made an impact on Coverager or made an impact in insurance, insurtech, fintech. I am Nick Lamparelli. I am in podcasting headquarters in Naples, Florida. Of course, I have my co-host, Avi, who's in Coverager headquarters, part 1 in Queens, New York, and Shefi, who's in Coverager headquarters 1A or is it the other way around, in Brooklyn, New York. Shefi, Avi, happy Friday.
Happy Friday. Hello, everybody.
Hello, everyone.
And for those that are watching on video, you can see in our Brady Bunch panel that we have a guest this week. So I'm going to punt it over to Avi to make the introduction for who our guest is. Avi?
So, yeah, thank you. This week was a big announcement for life insurance companies out there waiting to see what Lemonade has to offer. But we have a special guest, Aaron Shapiro, the CEO of Dayforward, a new life insurance company that just a few weeks ago kind of came out of stealth mode. Before that, he made his name from being the CEO of advertising agency, huge, very big and successful advertising agency. And not every day you get a very interesting person to enter the insurance industry, which is always great to see and have. And Aaron, really give us some background about you before insurance, and then we'll start asking you questions of why the hell did you enter the insurance space? But the first question is, let the audience know a little more about you before the insurance.
Great. So first, thank you for having me on the show. Just a small tidbit I have to say. So when I was learning about the industry over the last year and a half, I was a religious reader of Coverager and watched too many of your podcasts. So it's definitely fun to meet you guys in person and be on the show. So thank you for having me. So just a little bit about background. I spent my whole career in the technology and marketing space. At the start of my career, I started a marketing automation software company called Silverpop. If you think about the emails you get from companies, that would come from our software. I sold that to IBM. And after that, I started a advertising agency called Huge that we built up over 13 years I was there. So from a small company with myself and 3 partners to 1,500 professionals around the world. I sold that company to Interpublic, which is one of the big holding companies. And then after my earnout, I left about 2 years ago. And I thought, what I really wanted to do was I wanted to think about an industry where you could really use digital to really make a big impact and a difference on consumers. I got really excited about life insurance for reasons I can tell you. And here we are.
You have to tell us the reason.
Yeah, you have to tell us. Like, what did you?
Why life insurance? Of all the industries in the world, right?
I can tell he was in advertising because he like created the story and like dangled something at the very end. There, it's like, you got to keep going. Like, why did you stop?
I swear it's not on purpose. It's like natural. It happens after 13 years.
We need all the marketing we can get.
So I'll tell you what happened. So when I left Huge, I said, all right. So a lot of what we did at Huge was we would help really big companies help modernize their business for the internet economy. So on one hand, we had Google and Apple as really big clients. On the other hand, we had clients like Morgan Stanley or Comcast, these big firms when they think about their digital and how to improve it. So I thought it'd be really interesting to do the same kind of work where you're trying to modernize an industry, but do it as a startup instead of as a consultant. So I thought of all of my clients and I said, which industries need the most help, that had the biggest trouble? And we actually had a lot of clients that will remain nameless who were in the insurance business. Many of the largest insurance companies that you all cover, we actually had as a client. I saw the inside of these companies. And what I saw was that they saw the world was changing. Consumers had different expectations, but there was just this paralysis where they didn't really go for it the way that I saw a lot of other industries would go for. And that's how I got interested in insurance and specifically life insurance. And then at the same time, I wanted to do a company that I thought would make a big impact in society. And since I couldn't think of anything related to technology that would fix global warming, I actually got interested in both health and in income inequality and a lot of the economic problems people are facing. This is all pre-COVID, right? It's a lot worse now. I'm having a lot of trouble with these AirPods, so sorry about that.
Join the club, yeah.
I know. So anyway, and when you think about all the stats you all know about income inequality and people struggle with financial security and everything else, it felt like a really big, meaty problem that I could try to tackle. And you could create a company that would not only have massive enterprise value, but if we did it right, could literally impact the lives of millions of families across America by giving them better products that give them better protection. And I got pretty excited about that idea. And just to finish the story, I concluded that if you're really going to make a change in this industry, you couldn't be an MGA. You couldn't just resell other people's products. That's like putting lipstick on what everyone else is doing. You had to become a carrier and be able to innovate across everything, across product, across underwriting, across the full distribution, be able to go direct to consumer. And so a little over a year ago, we bit the bullet and said, all right, we're going to become the first modern D2C life insurance carrier, following the footsteps of what a Lemonade or Root or Oscar have done, but do it for life insurance. And it was about a year. Unfortunately, we had really good investors and other support, reinsurers and so forth, where we were able to get our certificate of authority and formally launch in Texas just a few weeks ago.
So from an outsider's point of view, working with these nameless life insurance companies, what would you say were their problems? Is it the fact that people are getting married at a later stage or having fewer kids, or they're not advertising as much as a Geico or Progressive for car or home insurance? What are the problems you see?
That's a great question. I would say the number one issue that I saw was they were unwilling to disrupt their channel. Like their customer is their brokers and their agents. Their customers, not the people buying their policies. And to me, that creates the paralysis in the industry. And I'll give you a small example. I was meeting with the C-suite of one of the largest insurance companies that exist. And I did this whole presentation around how important it is to think about your customers and your users. You guys actually made a little tidbit a few weeks ago about my book that I wrote years ago and those lessons. I basically gave my stump speech around that topic, right? And I realized they had all these befuddled looks on their face. And I realized an hour into the meeting that when I said customers and users, I was thinking about the end people buying their policy. They were thinking about brokers and their captive network. So all of their marketing was oriented towards how do we keep our brokers happy? How do we convince brokers to sell our products, right? They weren't talking about their end user. And to me, that is the kind of original sin of this industry. And that is the problem. And that, to me, that's the root of all the problems in this industry. If you think about when they talk about new product development, what I saw was they would talk about these, new fancy financial machinations that gives the brokers extra commission. And so they'll be more excited. It's like, it's not about what's going to give the consumer more safety or to better protect their family, or even in the worst case, better estate management for those people doing that. It's all about how to keep the brokers happy. And that to me, that's why the industry's broken. And that's the real opportunity that we have as a D2C company, which is let's start from scratch and let's create products that actually meet customer needs, heaven forbid, and really try to create an experience from end to end, from how you buy to what the product is to what the post experience is, that really meets customer needs. Every other industry does it, and we think it's time that life insurance did it too.
So I have a question. Yeah, go ahead, Shefi.
Well, I'm just going to point out where there's going to be instances where we don't think alike, right? So sure. One of the definitions that we have for insurance is that insurance is a rarely differentiated product sold to a generally indifferent consumer. Mm-hmm. And so the reason now, yes, in their DNA, many of these massive insurers, for them, the end user is that broker. I'll put aside the whole conversation on commission. Agents deserve to get paid, whatever they deserve to they're paid. If that's their motivation, that's something else. But that aside, there is a reason why some of these products are sold through agents, because the internet has proven that this is not a really great channel to buy a product, especially if that product isn't required. So life insurance is kind of this product where some of them think it's nice to have. Some users even call it a luxury product. And so this is where the power of a broker comes in and convinces with all the right selling points and all the emotion involved with a seller. So you understand why they're selling through agents, and you're also seeing InsurTech now going after agents, basically saying, hey, come help us sell the product. So it's not necessarily one channel versus the other. It's how do we build this hybrid of channels?
Sure. I mean, just to jump in for a second. So first of all, I'm not suggesting brokers and agents are going to go away, although I do think the direction is this way, right? It's going down. But what you're saying is actually the question that I asked. So I've been in the internet for too many years, And if there's one thing I've learned for the internet is that if anything can possibly be sold, it can be sold on the internet, right? In the early days, oh, do you think people will really sell groceries online? It's like, yes. Well, people really, can you imagine someone selling diamonds on the internet? That's crazy. And now everyone's buying diamonds on the internet. Can you imagine you're selling cars on the internet, right? And, you know, Vroom just went public selling used cars, right? So I refuse to believe that life insurance is the only category that exists that won't sell online at scale. I don't know if we're going to crack it. We'll see. I'm going to take my best shot. But if I am firmly believe that if we can't do it, someone else will fix it, because I don't believe this is the only category that exists where the internet isn't going to be a major channel. So, and the premise of what we did when we set up the company was, let's try to solve that problem. So we did tons of research to try to figure out what's going to get people to buy online, and can we develop a product and an experience that can get people to cross that hurdle, realizing that some people will still want phone calls, right? And we have a phone number on our homepage. You can call us and talk to a licensed agent, right? We expect a reasonable number of people to pick up the phone and call us. In fact, in our first weeks going live, that's exactly what's happening. But we still think that a large percentage of people will buy direct on the internet. And if we don't do it, someone's going to solve it, but we're going to give it our best shot.
So I think life insurance can be sold online, and we see the successful Policy Genius when they interact with an interested consumer user searching on Google, they have a good shot. On the other hand, you look at a company like Ethos, which raised money from Jay-Z and Will Smith, and I think Kevin Durant or Robert Downey Jr. and some celebrities. They were against the whole notion of agents. They were conflicted and all of that. All of a sudden, they're selling final expense, and they're selling it through agents, and they struggled very hard in terms of distribution. What do you see the problems is with if you're not on Google where people are, because it's not like a product where, hey, let me get you interested with life insurance and you'll buy. You need someone that needs it. They have maybe a young family, maybe a professional that is thinking that he's about to get married and it's time to get it now.
Yep.
Where do you see the places to advertise? And will you work with agents in the future, or will you only have your in-house call center people and you'll call it a day?
That's a good question. So first, we do see this eventually as omni-channel. We're not saying that we are biased towards direct and we're going to try to make that work, but it doesn't preclude us doing distribution deals in the future. And in fact, we're in significant discussions now with where we think will be pretty meaningful distribution deals. So we're not saying that distribution doesn't exist. It's really about a customer first mentality. What I will say though, that's interesting if you look at the stats, roughly 10 million policies are sold a year. 85% of those purchases start with people looking online, doing research about life insurance. But only 5% of those people end up buying. Everyone else finds a broker in some way and they buy that way. So the way we looked at it is this audience is online doing research. Our job is to find those people through modern digital marketing and building a brand. And at the same time, only 40% of families have life insurance. That means 60% of families should have life insurance, at least I think so, and don't. And there's an opportunity to expand the market by reaching those people as well. In fact, actually I have it in reverse, I'm sorry. 60% have life insurance, 40% don't. But if you look throughout history, for most of the 20th century, roughly 80% of families had life insurance. It's only in the last generation that it's declined. And we think part of that decline is that with the advent of the internet and different consumer expectations emerging because of it, people want to shop in a different way. And the old model of, my buddy's friend has a broker to talk to isn't really as relevant to a younger generation, especially when the average age of a life insurance broker is 58. So there's an opportunity, we think, not just to reach those in market, but to reach people who should buy life insurance, but are not in market today, but have not bought for whatever reason.
Okay, so before we go down the route of the market and the product,
sure.
Till you got to the yes from Munich Re, give us one rejection for the no.
I think
what got a carrier to turn you down?
First, you probably won't believe me, but we went to 4 reinsurance companies, and all 4 of those companies gave us a very compelling reinsurance deal. We believe we're the only company that went across those. We got offers from everybody. At that same time, though, we felt that Munich was the best strategic partner for us, so we decided to do a deal with Munich. We certainly got no's from other people. Like when we raised money. The biggest no was a concern about if we could really become a carrier and the amount of capital required, right? Because there hasn't been a new carrier in I don't know for sure, but we couldn't even find one in the last 30 some odd years that was started from scratch since the 90s. I could be wrong, but we couldn't find one. And it's a big lift. You have to have the financial capital required, the regulatory hurdles. It does not fit the model of the typical seed investment. I'm going to raise $2 million seed round and start a carrier. It just doesn't work. You need the kind of investment we had, and that takes a certain kind of investor. And I give a lot of kudos to not just Munich, but our other investors who's willing to take a risk to put this amount of money into an unproven idea to stand up a carrier. It's a non-trivial investment. So it takes a certain kind of investor to take that kind of risk just because of those regulatory hurdles that are required.
And just for the audience, I mean, since then, and I don't know exactly what came first, obviously Bestow was established in 2016, but Bestow is going the route of becoming a full stack insurer.
Yes.
Also live in Texas, right?
Yeah, so Bestow is not actually selling their own policies.
Yeah.
Not yet.
So they have
North American,
no, so basically they're currently at MGA, but when they complete their acquisition of the shell, then I'm sure they'll launch their own policies.
Yeah.
So let me, go ahead, Nick.
No, I was going to say, Aaron, your point about the customer actually hits home very much. My day job is I have an MGA, and I ask the question all the time: who is our customer here? And who are we trying to? Who should we be obsessed about? And that's one of the big problems in insurance. It's I find that it's hard to be obsessed over the consumer itself because so few of them are actually going to qualify for the product. And so we actually took the other tack. We went the other way and said, our customer is the reinsurer. And so our job is to take their capacity, and it's our job to figure out how to mold it so that we can then deliver it into the market that consume, so that brokers can sell it and that the end customer, the policyholder, can actually use it. And I don't think a lot of folks that are listening understand that dynamic. I think, and there's nothing wrong with going the consumer first. It's just that
it's interesting.
There are conflicting stakeholders in the
Absolutely.
game, and you as a carrier, not everyone's going to be your customer. I don't think a lot of people that come into insurance understand that. They see the TAM on it and they're just like, wow, this is a huge market. But I don't think they realize, like, for someone like Dayforward, you have to be very specific about who your customer is, because you're a carrier now. You only have so much capital and you only have so much reinsurance to back it. There's only so much business that you can actually do. You have to be very specific about who you want to go after. How did you make that calculation? Because your digital strategy is then going to follow that, right?
Yep. Yeah, it's a very good question. And look, to your point, it's a massive industry, and there are many valid business models like what you're doing. I'm not suggesting we're the perfect business model. We're just one approach to this industry, and there'll be a lot of winners in this new world. The way we looked at it was we thought of our customer as kind of the original purpose of life insurance, meaning your new parents or starting a family or planning to start a family, and you're looking to buy life insurance to protect your family and to protect your children while you're growing up. I appreciate there's a lot of other reasons people buy life insurance, where there's retirement components or for estate planning. We opted, at least for now, for the foreseeable future, we're not focused on that. We looked at that core income, that core problem around protecting the family. That was really what it was about. And that was how we got to our product, because we really looked at it from scratch and said, okay, if you're a young family and you're trying to protect your family, and we did a lot of audience research around this, what are you really looking for? And what we saw in our research was that consumers really struggled with the idea of a face value and a term length. First, they didn't know what the jargon was. So once you interpret it, how does a family know if $500,000 is right for them, or $1 million, or 250, or 500? You go to calculators and they give you different numbers. The rules of thumb don't always apply if it's 10 years or whatever the number, right? And our insight was, that number is supposed to be an estimate to protect your family's financial security and to basically replace that lost income that breadwinner had. So why not just get rid of this approximation and just protect the income? That was kind of the idea the idea behind it. And in many ways, it kind of harkened back to the earliest days of life insurance. If you go to Wikipedia, the earliest known life insurance that existed was actually in ancient Rome. And they had these funeral clubs, were basically burial clubs, they called them. And basically the idea was that all the families agreed that if one of the members died, they would support that other family who had the breadwinner die until, they would support them, which is basically they would replace that income of that person lost. So that was the kind of intellectual genesis behind the product. And then once we got into it, we kind of refined it and made it, really consumer appealing and had a lot of kind of elegance to it as well. So that was kind of how we kind of come up with the notion. And then it seemed interesting that as a carrier, we could do this because we could really rethink the whole experience and not be locked into the conventional notions of what a life insurance policy has to be like.
So we were talking about this, I think a few weeks ago, and I want to tell you something that you did really good and you got me thinking, and you're right. When I was getting term life insurance, I was speaking to the Northwestern guy on the phone, and he was a broker of a friend. He was a friend of my wife's, and why not let him make the commission? And he told me, most people take $1 million. That's a good amount. You don't want $500,000, but $1 million, that's a good amount. So after I went through the process with your platform, I discovered how $1 million is really not enough if I were to go tomorrow. So if you think about it, if you think how much money you spend every year, and I have a 2.5-year-old or paying rent. So yes, if I die tomorrow, my wife would be very happy. She'll take the $1 million. And then if she moves to like Saco, Maine to live on the middle of the highway, she could buy a small house for $100,000. She'll go to Walmart, she'll get a tender and all of that. And she could live. Set, right? Yeah, right. But she's from New York and, she likes to go out and have some wine, red wine and all that stuff. And you think about it, like if now, and again, my kid, for him to reach 21, it's going to be another 19, 18 years, $1 million is not going to cut it for her. Unless right. She really, and this is what I liked about your product. The thing I didn't like about the product, and I just read yesterday with the lottery, I think someone won the Powerball. Statistically speaking, I don't know the numbers, but the lottery says that when people win the prize, they opt to take it all at once in a lump sum over the annuity. Mm-hmm. And I think the other thing is the price, because when I went and said, you know what, you made me realize that I really need $2 million in coverage. Okay. Mm-hmm. Now this is my thinking, and I could be an idiot, but that's the thing. I'm saying to myself, I have a hard life. I need the 2 million term. Like I'll need that. And if my kid gets to 15, do I want the potential amount to decrease, which is what happens in your case? Or would I rather have like a 2 million and my son will remember that I did something good in my life, So that is, and again, I love the fact, and let me tell you what Lemonade did this week with Bestow. And I told Shefi this, they gave you two options, a 10-year term, a 20-year term, no more than $1 million. And Bestow does this because for under $1 million, they could eliminate the medical. Yeah. And I think that's wrong because you're really, this is one of the products, and Lemonade already got me with pet insurance, which I'm going crazy because of it. Once you get into that product, you're not going to switch because now you're older, you have higher cholesterol, you're going to end up paying more. Yep. And I'm not happy about it. I really like the transparency, what you guys offer with the product. I think it may hurt you where people are going to say, thank you very much for the insight. Dayforward, I know I need 2 million. Let me go to a company that no matter what, if I die year 18, year 10, whatever, I'll get the full 2 million. What do you think about that?
So I understand where you're coming from. But the flip side is that if you were to get $2 million in coverage versus our policy that declined over time, it would be about 3 times the price.
Are you sure? Because I did the calculations and it's happened to be the same. Like when I got from Northwestern Mutual and I did my calculations, it was very similar. Then
it would be a different rate class. We can discuss this offline, but it would be then you were comparing different rate classes. We set our policy so that way. Let's just simplify the math. Let's say it's 20 years in length and you make $50,000, right? So if you took, let's say 10 times that amount, it'd be $500,000. That policy would be versus our policy, which would be 100, would be then, let's say 20 times 50, you get $1 million if you died right away and would decline. Those two policies would cost the same. In fact, we structured our rate card so we would be the same. The way we built our table was we actually looked at all the cohorts of consumers we had, what you would get, what would be the recommended length on Policy Genius for your income and age and health level. And we made sure that you were the same or less if you bought our policy. So we're equivalent. So this line versus this curve, if you look at the net present value of payoffs, are the same. The difference is you're getting more in the early years, but you're getting later later at the end when you don't need as much money. So yes, in the ideal world, if you got 2 million all the way across, like that's obviously a better deal, but that's 3 times the price. That's the difference, right? So since you can't pay 3 times the price, you want to do it economically. We create a very economical solution where you're getting more coverage in the early years where you need it. And in the later years, when your kids need less money to support their children until they're grown up, you are getting less money, but your family needs less money there. And that is savings to your pocket in the form of less premiums over the life of the policy. The other significant thing I want to point out, which I don't think we did a very good job marketing on our site, and we're going to promote this more, is that one of the most unique things about our product is that we allow you to change your policy as your life changes without any underwriting required. So let's say that you get a raise, right? If you let us know you get a raise, then we can automatically protect your new income. And then your premium just pro rata increases to reflect your new raise. Likewise, if you have another child, you can automatically extend so that that child reaches adulthood as well. So we have a built-in flexibility on the policy with, again, no underwriting required, no preset pricing. This all preset pricing. It happens for everybody no matter what. That we think is also really revolutionary because it means now you're not stuck with this policy you bought, a million years ago and it's no longer relevant to your life today. We actually allow you to adjust as your life changes. And I think that's a pretty big deal for policyholders.
I think go ahead, Nick.
Yeah, that is.
I think that's the big challenge. I think that's going to be your big challenge is, I do think insurance can be sold on the internet, but there's a heavy weight on, I think, the direct carriers on their shoulders having to communicate all of the different information, because even as you were discussing that, I was just like, oh, it's a lot of information. Like, how can you cram all that into a website or, a webinar or stuff like that? It's hard to do, which always brings me back to, maybe I should just get an agent to just recommend something for me, because it's a very
good question. So our hypothesis was that a very simple statement, which is if you die, your income continues until your children are grown up. That's what you're purchasing. And if people buy that, we are eliminating the 2 major frustration points that consumers have today, which is how much coverage should I have and how long should my policy be? That's what you have to buy. So our bet is that we can, by eliminating the choice in how long the policy should be and with the face value, we're actually making it easier for your buying, because we're saying we just protect your income. Our highest performing ad in our earliest tests is really simple. Protect your family by protecting your income. That's it. It's so intuitive. It's like, that's what I'm buying. I'm not buying if it's 500 or 750. I'm just protecting your income. Now you have a good point, which is when you want to understand the details of what protecting your income does mean, we do have to explain that. And that is a marketing challenge. And we are constantly, we're a week and a half in. So we're already have learned a week and a half, like where we did a good and bad job. And we're already making revisions to the website and our marketing to do a better job explaining that. Because it is a different kind of concept, different from a face value.
It is. And your 2 points are differentiators.
That's right.
Right. And that's to us, like when Shefi, Avi, and myself have these discussions, it's the first thing I look at is how are you going to differentiate yourself? Yep. Like it's, life insurance. This is a whole bunch of term life players. Property and casualty, there's a whole bunch of them. Tenant insurance, there's a whole bunch of them. How are you going to differentiate yourself in this, bloody red ocean of competition? And that is a big differentiator that I think can carry the day, or I think amplify your initial message of the, you're just replacing income, like make it simple. And here are these other things that will continue to make it easy, because I don't want to have to take a medical exam and to have to go through re-underwriting at some point because I have a new kid or a raise or whatever. It's that thing that makes the consumer pissed off at the at the insurance companies.
Yeah.
Like,
and,
can't they make this like Amazon?
No, it's great to hear. And that's what we tried to do. We said, what are all the pain points? Let's get rid of them. That was really the base of it. And look, when we first started working on this, you know, we knew there were already the MGAs that raised a lot of money. We expected there was only a matter of time before Lemonade launched their product. In fact, the CMO of Lemonade used to work for me at Huge. So it's, you know, we knew if there was going to be competitive, right? So we said the only way we're going to win is we have to create a differentiated product, right? If we offer, you know, $500,000 or whatever 20-year term for $19.95 instead of $21.95, like that's just a race to the bottom. No one's going to win that game. We have to differentiate, and we felt there was an opportunity to build a brand around financial security, where we did differentiate, where we could really build a meaningful relationship with customers and really create something new. And by the way, as a carrier, this is the first of the innovation. I hope you'll come back in a few months. I hope you'll invite me back in a few months when we have our next round of innovation.
Well, you keep hammering on financial security, so I'm assuming that life insurance isn't going to be the only thing.
No, we see it as the first in a suite of products. I don't want to be that specific on a roadmap, but what I'll generally say is we went through the exercise of what does the last generation companies sell, like a MetLife or New York Life, and you look at their suite, and we saw just as much innovation as we brought to this product, we think we can bring to their whole product line. And, you know, that's a long road to get there, but that's kind of how we're thinking about the product. And in doing so, we think we can build a really compelling brand and company that resonates with this generation of consumers in a way that we think no brand has really done today.
Let me tell you.
Sure, yeah.
No, I think the simplicity, very simple, what you guys did in explaining to me, as I said, you know, as someone who bought recently and I thought I knew, I discovered that I didn't. So I think you did a great job there. I think as a marketing professional, you'll know you're going to have to now compete with the notion of bigger is better in America. Get a bigger size popcorn and a drink. You know, you're not going to drink it anyway, but you're going to pay for it anyway. So people might have that, but let me ask you this. It's such a great product to go into the employee benefits channel because it makes a lot of sense. Are you totally thinking about distributing with companies like that?
Yeah, I'd love to get into that space. I totally agree that it makes a ton of sense in an employer market. We just have to get there. Absolutely.
Okay, nice.
Good, Shefi.
Shefi? Looks like you have something to say.
I have something to tell Shefi that I have to say, which is,
go for it.
Which is we were trying to do like a super quiet soft launch just to test and kick the tires. But you're such a good reporter. I know, you're such a good reporter. Like 12 hours later, you put it on coverage. You're like, all right, well, there goes that.
I'll tell you what I told Daniel Schreiber in a LinkedIn message the first time we covered his claim. Yeah. My background is in quality assurance. I think I will die with those traits of just spotting the differences. And sometimes I'll just tell Avi, I feel like there's something different here. I can't exactly tell you what it is. Maybe it's just a sentiment for now, but keep an eye. So
I can tell you that Lemonade wasn't very pleased with the life insurance announcement. I don't think they were ready. And frankly, I tell you, I was disappointed. And it really tells you about the struggles. And I know this personally because one of the things we do is speak to a lot of current and former employees of companies. Bestow is struggling. Yes. They're struggling with their tech. They're struggling with distribution. They tried very hard to build a brand, display advertising, all of that. But their biggest revenue that comes from their channels is actually lead gen. And you have to ask yourself, who is this person that is comparing life insurance?
Yeah.
Who are you? And because it's not, it's not like car insurance, but I believe people are not going to choose the first option that they see. And you're seeing their move. So Lemonade is probably getting 100%, and Bestow is maybe keeping the 25%. So because you get like 125, so it's not a lot, and you can't win with that. But I think they're very proud that they were able to get the Lemonade. But I'm not so sure that Lemonade is that committed to the product. I think it's another check mark to please their investors because they really don't want to get into the car insurance and the dirty lines of coverage that really take a toll.
Yeah, I was surprised they launched Life before car.
I don't think they would launch car.
Sorry.
Life insurance to the tenant and to the homeowner.
Yeah.
So Sorry, what did you say about car? You'd be surprised if they don't launch car. Why not?
If they do, we believe that they're going to go as fast as AI Jim or AI Maya, and with the car insurance claims are very sticky, tricky business.
I think they'll
Even
probably launch
pet insurance, and they're realizing that now.
They'll probably
There's
launch
no standardization.
pet insurance as a pet owner, pet parent or whatever. There's a lot of fraud in the pet insurance space by vets. Yeah, they come and tell you, oh, listen, this is not approved, but we're going to write it in a way that is going to be approved. And I'm like, listen, my pet is not going to say anything. He can't speak. I'm not going to say anything. And this is what happens. And really the claims end up being, pretty high. So I would be very surprised if Lemonade gets into car insurance. Eventually, I mean, they're going to have to do more because I think the renters, you can't continue with the renters. You can't continue with the pet. Yeah.
And if you look at their financials, they're losing money on those renter policies. So at some point they have to cross sell.
Aaron, who came up with the name Dayforward?
We actually hired a creative person who I'd worked with for a while. And it was one of these crazy brands one of those crazy exercises where you kind of have a million names up and down. And then I was like, Dayforward, I really like that. From this day forward, it really kind of worked and resonated. And then I went on Google, and then I went on one of those domain registration services. And amazingly, no one in the history of the internet had ever bought Dayforward.com. So I bought it for $10, and I was like, "We are done."
No way! It was available. It was available.
Wow! It was available.
That's crazy.
So I bought Dayforward.com for $10, and we got a name. And I think the name worked really well.
That's amazing.
The name is really good.
Yeah, so it worked out really well. And we have a great team. I mean, sorry, what'd you say?
It's an asset now on the balance sheet. You got to protect.
Absolutely.
That's right.
Worth thousands or tens of thousands.
Yeah, and then one of the things that we did on the whole marketing side is I hired a bunch of folks from Huge who make up so we have kind of an internal agency in-house. So all the marketing and advertising we do internally, from the media buys to the creative, and it really lets us do a lot of innovation on that front. So it's kind of a fun company because on one hand we got that group, then we have all these engineers, and then we've got actuaries on staff, underwriters. A head of league, our chief counsel used to be a senior lawyer at Prudential, dealing with all compliance stuff. So it's like this really eclectic mix of people from the life insurance industry, plus all these tech people and all these advertising people. So it's kind of a fun constellation.
So it's one of the things that the first thing I look at when I view an insurtech is there anything differentiated here? Like, is it, are they just trying to put digital lipstick on an analog solution? That doesn't excite me. But when I do see something differentiated, the second thing I say is, how difficult is it going to be for them to acquire customers, which is the challenge in insurance, because no one eagerly wants to buy the product. So as being, don't take this the wrong way, I'm going to call you the Don Draper of insurance. You came from an advertising agency. Since you are the Don Draper of insurance,
okay, but hopefully I'm not as much of a psychopath, right? Okay.
You're a genius. So that it is, to be able to differentiate yourself and connect with people at the right time is such a challenge in this space that I always view like, okay, it's a differentiated product that someone might have, but it's going to cost them so much to get business to come into the door. The economics are going to be difficult. However, you guys sort of thought about that, because that's a big challenge with direct writers.
Definitely. Look, when I started this business, I looked at it as there were two risks to this business. One is, can we actually become a carrier, right? With all the regulatory and financial complexity, can we pull it off? I had no idea. That was the first risk. Second risk was, can we actually acquire customers at scale for an affordable price that makes our economics profitable? So the last year proved we can do number one. We were able to become a carrier. And at this point, it's just execution to get into all 50 states, right? There's no real risk there. The second question is, can we actually acquire consumers affordably? And honestly, I don't know, right? I think we're gonna give it our best shot. I think we have a good team that can do as good a job as anybody, but time will tell, right?
Most of the folks that come into the insurtech space come from the tech side. You have a tech background, but from Huge, you're also coming from a marketing area, so you understand marketing and advertising and the effect of that. So how do you think you're going to go about tackling that?
That's a good question. So the way we looked at it in the aggregate is we had to have confidence we could do that. So we asked ourselves, with the right amount of capital and the expertise we could have, could we build a brand in this space that could meaningfully drive affordable customers at scale? And where we saw the white space and the opportunity was, if you look at the research, most consumers who have life insurance do not know who their life insurance company is. They just know who their broker is. Avi, I don't know if you know who you're in the industry. You probably know. I personally actually have no idea who. I should probably figure this out now that I'm selling life insurance.
Buy from Dayforward. That's
right. Well, as soon as they get to New York, right? But yes, I have no idea, right? No, people don't know. And then if you ask consumers, name a life insurance company, no one knows who they are. The net promoter scores of the MetLifes of the world are all single digits or negative, right? This isn't, and if you look at it, you say, why is this the case? Well, you could, from an economic standpoint, you could say that most of the marketing dollars that an industry of this size would normally spend to build brands are now going to commissions. So there's no money left over to build brands in this space. So our hypothesis was that if we free that money and allocate it to a brand, there is a white space in this market where we could build a brand successfully, and do it in a way where we can actually drive sales at an affordable rate. And our assessment of the MGAs were, first, they're not marketers. So we didn't, I have a lot of respect for those companies as competitors, but I don't think they're great marketers. Lemonade is a good marketer.
What you don't think working with agents is a brilliant marketing move? Is that what you're saying?
I think we hit that territory. Although what I'll say is I think there's opportunities in agents. So but there's innovative stuff to do around agents, but that's a whole separate conversation. So we felt there was a white space where you could really do it in an innovative way and build affordability because of how much money that would normally go to marketing, right? There is no equivalent of Progressive and Geico in terms of the way in which they approach marketing when you look at this sector, even though this sector is actually larger than homeowners insurance, right? It's less than auto, but it's more than homeowners. Yep. So there is an economic, now clearly it's a different sales model because that's a must buy and this is a nice buy and all that stuff, right? But there felt like there was a white space, and we did a lot of brand research on how you would attack it and what are the channels that could work. We found tremendous arbitrage opportunities just in media because people are not buying media well when to attacking this space where you wouldn't see that arbitrage in other more mature categories. So we felt there was an opportunity. Now, I don't know if we're going to succeed. We're a week and a half into this, right? Ask me in 6 months if we can do it at scale. But we felt it was open enough where it was worth a shot. And we think we have as good enough team as any with enough capital that we could see if we can make it work.
Let me tell you two things. One, it's a very interesting point what you bring up, Progressive, Geico versus the life insurances of the world. And we see how that impacts awareness. If you look at Google searches, obviously car insurance way more than life insurance, just because you see more car insurance on TV than you see life insurers. And that's one interesting point. The second interesting point I really like, after 6 months, come to ask us if we can do it at scale. We have a lot of MGAs that raised a lot of money and they're giving it a second and a third and a fourth try. And, it's such I tell this to Shefi and every client that we speak to, we say that life insurance is the best line of business because it's not commoditized or as disrupted as car and homeowners insurance, but it's also a very challenging product to distribute. And obviously I can't not go to the users versus customers. Credit Karma, which has users, they're a big insurance distributor. Mostly focusing on car insurance, and they enjoy that usability aspect. And everybody come in, check the credit score. Hey, we know how much money you have in your loan. We know how much you pay for a lease. We know where you live. Here is a good quote, and they're very successful at that. But Acorns, I can tell you, try to do something around life insurance, but their target audience, their customer base is young people. They're not married, so it's not relevant for them. So finding that media, those mommy blogs and doing you could do very interesting things with the brand. Like now I think about it, do I want my wife to have $1 million up front, or do I want to limit her capabilities and say every month you cannot pay more than, this is how much money you're going to get?
Look, you're joking about it, but it's actually realistic. Really. We saw a lot of issues. People are like, what do I do with $1 million?
Exactly. With the lottery, we hear the stories. And you know what? As I said, personal opinion, I'm like that. I go to a buffet, I take 3 plates. I get a seat, I put the 3 plates, and I go for a fourth. That's me. I don't know if everybody's like that, but it really is different. I really think you have that simplicity, and now it is like media. We're big fans of we call it awareness by association, and of course, don't work with lead gen companies. Don't go to EverQuote. Don't do that.
We're gonna try.
No assurance like you. Well, okay. Try for the credits. Get a referral bonus.
No, what I say, we're going to try not to, was what I meant.
Oh,
we're going to try not to. That's what I mean.
Yeah, but there's a lot that you can do, and also I think with agents, as you said, if you utilize them properly, there's nothing like bringing guilt and a friendly neck to the table. It really helps because it is every life insurance startup we spoke with a very long sales cycle. It could take weeks, it could take months from the first quote to eventually saying, you know what, let me buy.
And look, you have a great point. And there's one thing having done, I've been fortunate enough in my career to start 2 companies that both did pretty well. And the biggest thing I've learned is that like these companies change, right? Everything I say now, if you're in 6 months, I could be like, oh, I was totally wrong, right? Like we just have to see, like the nature of this is like, we're in the game, we have to test. We could be totally wrong and end up pivoting. It could end up being that our technology that we've built that we haven't talked about, but I'm very proud of, maybe that ends up being our core business. Like, who knows? I mean, my first company with the marketing automation, we started doing email greeting cards. That's what I launched the company, like stupid animations to say happy birthday by email. And we ended up pivoting and became enterprise software. And that's what ended up getting sold to IBM, right? So you just don't know. So, I mean, what I feel grateful for is, we're in the arena, we can give it a shot. And we've learned a tremendous amount in the last week being in market for a week and a half. We're going to learn a tremendous amount over the next few weeks and months. And we have to be nimble to see how the company will evolve and what the market tells us.
So who's the best advertiser in insurance? I have to ask that in your mind. Who's the best advertiser?
I'm a big fan of Geico. I think they do a good job. I mean, I know it's like traditional stuff, but they do great ads. They're funny. They work. The awareness is through the roof. I have to give Lemonade a lot of marketing credit though, because while their ad budgets haven't been high, if you do customer research and you have unaided awareness of insurance companies, 18 to 34-year-olds, Lemonade is top 3. It's pretty incredible for a brand new company to have that much awareness for a category with this much money being spent. So I have a lot of respect for what they've done. I have a lot of respect for Root too. If you look at their referral program and how they generate leads through referrals, it's pretty amazing. So, I have respect for a lot of these companies. I mean, at the end of the day, insurance is a really interesting industry. There are a lot of smart people in it. A lot of people are doing good things. And I'm the first to admit I have a lot to learn in this sector. I'm new to it. So I see myself more as a student than someone who has all the answers in the sector.
Before we sign off, do you want to talk about the technology a little bit?
Sure. So when we decided to develop the product that we talked about, we looked at, okay, how are we going to support this from a tech standpoint? And we actually found that there wasn't the right insurance systems that would really support this kind of a product. So, and generally speaking, a lot of the software is pretty legacy in this industry, unlike P&C, where you have a lot of interesting startups that are doing SaaS businesses. So we actually made the difficult decision to build a full from scratch policy admin and underwriting system. So the underwriting is all our own technology. We basically have a whole bunch of developers, and our joke was our job was to automate our underwriter. We would grill her with a million questions and kind of automate the whole thing. And so we're very proud of the fact that the application you go through online, not only is it our own underwriting engine, but it's fully dynamic. So based on the questions that you give and the data that we can pull behind the scenes, we update the questions that we ask you. We're able to give you final prices within minutes without underwriting or a human involved. So for most people, you can actually, from the time you go online, you could check out, put your credit card, and get a bound issued policy within minutes. Literally 3 or 4 minutes, you're through the whole thing. For those people who need medical, we actually make it that only about 20% of the people need medical. And even for those people, we actually built an at-home test kit. So you don't have to have a phlebotomist come to your house or go to a place. A kit gets sent to you and you do a Zoom with our nurse practitioner where you swipe the inside of your mouth and you pinprick the side of your finger, and then you send it back, and 24 hours later, that's the medical results. And it's all proprietary. We built it in partnership with a lab.
Oh, that's very nice.
Yeah, and we did that because, like, in COVID, who wants a phlebotomist to come to your house, right? But we wanted to make sure, we wanted to have some people get medical because we wanted to have competitive prices elsewhere. And we also wanted to support very high levels of income. You can insure you can have $500,000 of income and we'll issue you a policy, right? So it's pretty big coverage levels that we wanted to support. Yeah. So we're really proud of a lot of the plumbing that is kind of hidden behind the scenes that really makes all this thing come to life.
That is smart. The at-home test kit, that's really good, because many apps now, not in insurance, they do the whole thing, like measure your body weight and water weight and all these things, and people are very engaged. They're very happy. Apparently they don't like people coming into their homes. You don't know what you can find there, but yeah, that's very good idea.
Thank you. Yeah, I mean, that was like I remember when I got life insurance, the scariest part was when this phlebotomist came to my house, right? I remember sitting in my living room and my son-in-law walks by and they're like doing all this stuff. And it was like, this is not happening. This is wrong.
Oh yeah. I had two come to my house, and one for AIG and one for Northwestern. And they came with this little portable weight scale, which was nice, I thought. But yeah, very nice stuff. I mean, it's nice to speak. Apparently you could lie to them, and the second they write it down, when they bind the policy, the life insurance company can't back out of it.
It's insane.
Apparently. Yeah, that's what he told me. I don't know if that's true.
I remember my phlebotomist was like, "Oh, you weigh 185. We'll just say you weigh 180." And I'm like, "No, you should tell the truth." And I'm like, "How wrong is this that I'm telling the phlebotomist to tell the truth on my application?" Like, it's insane.
Well, listen, he's watching your wallet so you don't pay extra in commission premiums.
So but it's definitely been a fun ride. Building all this stuff, and we're really excited that it's out there in the world for consumers to use it, and hopefully we can get many more families insured because of this, and families can have a safer future as a result.
And what is your next state after Texas?
We've applied to several states, so we can definitely let you know.
Florida?
I don't feel comfortable saying now, but as soon as we find out, I think Shefi's going to know before I know. But I'll definitely let you guys know.
Just let us know.
Many companies are moving to Texas. Many companies are actually moving to Texas now. So you've chosen a good state.
Yeah, I mean, it made sense. Look, it's the second largest insurance market. The regulators have an excellent reputation. So it just made a lot of sense.
Yeah.
Well, welcome to the industry, and
thank you.
Good luck. Yeah. And it was wonderful to have you and hear the entire story.
Thank you for having us, and keep up the good work as well. I expect all of my primary information needs to continue to come for you guys. So.
Okay.
Thanks, Aaron.
Aaron, thanks you.
Thanks, everybody.
Very much appreciated. For everyone that's listening, for Avi, for Shefi, for Aaron, I'm Nick. Have a great weekend. Have a happy next week, and we'll see you next time on This Week in Coverager. Thanks, guys.
Thank you.
Yeah.